Hello, everyone. Happy Friday. Non-farm payrolls. How is everyone doing? Are we exhausted yet from the week? Are we exhausted yet? So, where do we sit? Just want to expand that screen a little more. Good morning, Patrick. Hey ho. Off to trading we go. Waka waka. Good morning, Ted. Great little dip. Now let's rally. We got non-farm payrolls out of the way. Morning all. Mixed bag. Bob cannot be on this morning. Still dealing with a family situation. But I did get some text from him. We went back and forth with text, so I'll give you his thoughts in case you were wondering. By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the likey Mikey button. All right. Let's the grand rising, Christoph. What? No rally allowed from Waka's perspective. Starbucks beat. People still buying expensive coffee. I talked about that slightly yesterday, but yeah, the consumer is not tapped out yet. That's what I'm watching for. It looks like the consumer is going to remain somewhat strong, at least through the holiday season, and then we shall see if they're tapping out Q1, Q2 next year. I'm expecting a pretty decent tap out starting after the holidays. So that's where we will be. By the way, let's get to some numbers. Let me switch cameras. Non-farm payrolls, headline number is up, but the unemployment rate did miss, ticking up. But for historical context, as everybody who's citing that should be the old magic P word. Here is the historical context. We're at 3.7. You can see. Remember, the Fed said they could withstand easily ticking up to 4.5. Here's where we reside. There's where we reside. So, geez, my allergies this morning. Also, that ticking up, I'll give you Bob's thoughts on this. First off, before I even spoke to Bob, I was looking at this. Average weekly hours in line, so that's holding strong. Average hourly earnings month over month ticking up. So the wage component remains very, very strong. The participation rate ticking down slightly, but the wage component, now this is pulling back a bit, but it's still strong. By the way, yes, I've seen all this, so I do expect some major revisions going into year end, and the year end, remember, there's generally a cleanup revision after the final print for the year end starting next year. I expect that to be massively lower. Not saying why. I expect the cleanup print to be massively lower. Bob said picked up 63,000. But both of last month's numbers were revised lower. Last month revised from 315 to 263, and the previous month revised lower from 315 to 292. So net, it's really no change. But all in all, the jobs market is strong, but not strengthening, except for the labor component. So this shows me that the tightening has not worked its way through to the general economy quite yet. Fits the narrative, in my opinion, of Q1 and Q2 being very bad, and this quarter possibly being okay from the stock market perspective. So there's the Bob take. Pretty green. Looks like we're buying the Friday. By the way, we've been red we've been pretty red, so also you have a lot of short covering going into the weekend. And squaring up positions. Also squaring up, we have an election on Tuesday, but there's no rest right now. This is not only from the numbers perspective, it's like back to back to back. We have FOMC, we have non-farm payrolls, we got a friggin' election, we got CPI numbers. And then we could have a contested election across multiple things. So who knows? And then we only get 1 day for Thanksgiving. Not even 2 days. Happy Friday. All right, so your mega caps are up, which should boost the overall indices. Pretty much everything up across the board. The sector, I did not just revise this. This was from a little earlier, but everything green. Everything green. So going to be watch. We'll take a look at this. By the way, I'll have to refresh this again, but it ticked up for the 75 basis point. Then I'll get back to, I see things flying by with the conversations. Take a quick look at that. Back to roughly, again, 50-50. I think we're going to get the 50 basis point hike. So you can see we tested down, we tested up, breaking above these key levels from last night, stalling at this 37, 59, 37, 60, trying multiple pokes above it. What was so fascinating also is, yes, this was a little valid double. That was not triggered, and this essentially technically invalidated it. What am I doing off here? I'm going to put up the targets anyways to see where we sit because we're into a clear path move. Technically, this spike down invalidated. I'm going to be watching these levels, though, to adjust positions. I think they can still be utilized as long as it's above this 37.59 level. And I'm keeping an eye on any pullbacks with the 1 hour rotation zone and now this breakout level. Not trading as a double, but you can still use those levels because we're into a clear path move. This is just applying sort of some on-the-fly technical analysis, but I want to stress this does not meet the technical definition because of this spike down. This is sort of I'm blanking out. What happens when you're in the huddle and you call just a play out of the blue? You're like, scrap what they're calling on the sidelines. I'm calling an audible. So that's what I'm using, and I'll just use those as key levels to watch for because it's technically not entirely correct. All right. Let's see who we have. Good morning, Martinez. Good morning, Coco. The show goes on. We may not rally, but the June lows will continue to hodl until they don't, especially in the NASDAQ, but we shall see. They'll hodl until they don'tl. You're going to have to tune into the podcast to think what I see longer term. Morning, Rams of Fall. George with a paraphrase of Bob. No new longs till after New Year. What a snapback rally. Again, we're holding these same levels from last night. We're into the rotation zone. So right here, my next level, this is where it sort of helps me to fine tune an area. I'm still going. The breakdown zone and the top of the rotation zone, 37.90 to 37.96, and then 38.09, then 38.21 to the upside. My key support, 37.59. You break below that, not good. So, and then if it does go on a major ripper today, wow, 37.81 is pretty key. You get above that, I'd have to use the intraday harmonics because you have a step down. No, not a ladder attack. A step down ladder pattern. Just boom, boom, boom. So you can use these key areas about 38.44, 38.61 as key. I'm going to be really focusing, though, off the open with the opening prints and the opening tick. NASDAQ. Back into this 10.914 area, the breakdown area, into the rotation zone. So next minor area will be about 10.978. Then we got right around 11.095 to 11.1 on a major ripper higher. Key support, we're going to have to just drop down. Your early warning sign, I'd say, is back below about 10.866 level. But the real breakdown level would come back toward 10,817. Spideys. I did not have a chance to look at this morning yet. No double qualification. You still got the little gap, and it's back above there. So the gap is now support. 374.90 to 375 into the clear path move here. The next key stopping area on the spiders aren't until 378 with the declining 1 hour rotation zone. Sorry, 1 hour rotation zone declining, and this key level from before 378 and then 379.87. Major breakdown level. So those are your targets. If you break below this 374.90, your support level, I'm bumping this down to show the major support level. If it does roll over, is 373.33. The Qs. Now the Qs, you can still use the old double. Above the trigger point, 264.49. So now we have the levels 266.50 roughly. Then I would not ignore this 267.60 area with the declining 1 hour rotation zone. And that's not just for today. These can be carried forward as long as it does not break key support. The key close back from Wednesday, 265.66. So that we're still below that pre-market. So that's going to be the first target to the upside, and then 266.50 area. Your support, since we're not above this yet, we could still target the gap fill and then pause or roll over. Your key breakdown area, besides looking at this 264.49, would be back at 263.38. So first key support, 264.49. Why am I using a high? Because it's a technical trigger for this double. Now remember, you still need a close. A move above this is technically not a close above this. So could it break down rapidly in the open and not get a close above this? And I'm not talking a 5-minute close. I'd say you at least need an hour technically if you're trying to play it longer term or throughout the full day. So really watch this level for the closing bar. That's where we sit right now. Let's peek in at the VIX, which is still heading on down. Next major level, 2371. But the VIX still trending down, so nothing there. Dollar index pulling back, which is also supportive of the market. Still, now we have a major dollar index consolidation. To put this into context on a weekly time frame, since we're still, it doesn't look like we're going to trigger the weekly double again, and another push higher will probably invalidate it. This overall, I would still categorize as a pretty decent sideways correction. Slightly pullbackish, but if you look here, the last major breakout zone, right here, still holding above and letting the rotation zone catch up. Yeah, you could almost argue for the slight pullback, but this is correcting, remember, from massively overbought conditions and cycles at the top on the weekly, getting to cycles at the bottom and not a huge pullback in the dollar index. So pay attention to that going into the next couple weeks. The notes coming back down, hitting this second target area now twice. And yes, this can be utilized as a double. So after this, I just want to point this out. A close now above this point would be a final removal pattern trigger of this. Why? Because that would trigger after hitting the first and second, the step downs. I don't need to wait for any more of a trailing stop on this. You can do this on especially the 1 hour close. The 1 hour close in 41 minutes from here. Along as that would be the final exit for a position. If it does not close there, though, when we roll over into the open, it could still head down. So that's how I would be utilizing it from and that could be a stop and reverse for a little snapback pattern. That is all that is. And I'd be focusing because this goes into above this ledge here. Yes, technically this is the move that started it, but you have this spike up, which almost resets the move. This goes into this, so it'd be first and second targets as the key area only. And not confirmed, but not triggered yet. The Dow. I had an interesting conversation with Jimmy on the Dow. That's Jimmy Iorio. And I did invite him on for a live stream appearance if he wants to come on. So we will have to see if we can get that to happen, since I know he's got a very busy TV schedule. So let me know your thoughts. I hope you'd all welcome him with open arms. I know you would, actually. I don't have to ask. The Dow still running back up. The key area, this just pulled back. Where it looks like we're going to get the double cross pattern, which is a bullish continuation pattern. And this is exactly where I'd utilize just if for short-term trading, 34,422, and then I'm watching on the closing basis 32.9 or 593 coming up out of the daily rotation zone. It's going to be interesting to see if it moves up here and we get a more significant topping pattern going in early next week. That's how I choose the little harmonics there. Russell. Pattern still in play. Your key resistance into the open is where it's trading against right now, this 1805 level. Above there, you don't have much resistance. You have a breakdown level right here, and you have this key little support ledge. I'd err on the side of coming right around in there about 1831, not just for today, but on any continued rally. Crude finished the double, whether you're using conservative or not technically finished on the aggressive patterns. So if you're looking for your next minor pattern higher, and then it's done, 93.04. Whether it's done with this or done with this, why I had these on was it was counter trend, but if you wanted the aggressive, that's still fine because you're in consolidation and it's technically viable. That's a call based off your independent. When it's in consolidation, they're within roughly a percentage or 2 points from each other from all the testing. So it's not a huge deal, especially with this being another stop reduction. Where else do we sit? Options 22. Any thoughts on the bounce in futures based off the numbers? Illogical does not follow the last several announcements. How's this good for tech? Fake bet. I think we're in oversold rally options 22. And squaring again, so I said squaring up positions, taking profits on any shorts. It's going to be the early bottom pickers based off of this pullback. If you take the look at the NASDAQ. Also, what's this? This is major key support. All right? Major key support. Why? If you kiss this area goodbye, watch out below, especially in tech. This is major support. If this support were to tank, could it tank next week with election results or with CPI prints? Yeah. I'm not surprised at this. And if you look at this, even a rally back to 11,069 is just a little minor snapback to the prior. You have support, resistance, support, support. That would be back to just key resistance. So it's got a lot of chewing through back to the upside now in the NASDAQ. It's where we have divergences. Dow's still strong. I'm sorry to keep alluding to it. I talked about my thoughts with the Dow versus the NASDAQ with Jim and how it ties in with Y2K and what I saw there. I guess I'm plugging the podcast a little too much. S&P and Dow holding up. I might have made a porridge analogy. Uh, Bob and Mike, no, Bob and Mike are not always right. We're not trying to be right. I'm trying to find trades, and all the trades don't work out. That's part of probabilities. It's not about trading is not about being right. But thank you for that. Again, we're just trying to provide good information and counteract some of the I guess you'd call it the FUD out there. The nonsensical FUD. We'll see. Hey, Waka, does it matter? Let's say they go 50 in December and 50 in Feb, or 75 in December, 25 in Fed. I mean, the terminal rate is actually edging up now. With the swaps market was pricing in 5.25, I think by next May. 5.25 by next May. Think about that. So if we do between December and Feb, remember there's no hike in January. If we do 100 basis points between the two meetings combined, does it matter? Not in my book. Yeah, it might matter from a short-term trading perspective, not from a more macro, a long-term perspective, which is down, down, down. Tesla, gap up, so gonna be first. If the market continues strength mode, we're at 222.07. Your key support coming in just around 221.80. You break below that before the gap fill, and yes, you can use gap harmonics as always. But your key support, come on. Even before that, 218.90 roughly, and then I'd be watching. Remember the gap, and then I'd be watching 216.60. I'm not going to do the harmonics. We don't have the official open yet. And why those levels? This is a breakout zone. This is a little support zone before the full gap fill, which is technically to the close. So those are the levels. If 222 holds 221.84, from a pure technical perspective, this gap was not filled back from Tuesday. Where would I focus, though? My stop raise from a bullish perspective would be around 266.40. Then I'd target right around the gap fill area. You have a lot of resistance up here. So anywhere just in front of 228. Remember, yesterday we did not close below the 62.5, so we did not get any confirmation yet for a retest of this low range yet. And no, we don't have a double in play. This is now, and it's not a head and shoulders inverse. We just have slop. Good morning, John. So, let's see. Are we going to see ES? Well, first of all, we're not going to see ES to 390. I assume you're asking about the spiders? Because if you saw the S&P to 390, we'd be in waka waka heaven. We'd be like in full-blown, hey, let's just shave off 98% of the market. So you're talking about the spiders. Will you see 390 today? No. That's a hard no. Even on Rip Your Face Off rally, you're not going to see 390. So, all good. All right. So I'm just trying to catch up. 390 is a pipe dream. You could get to those other levels I covered earlier. Hey, Bob's here. Check my text. What the one sliver of weakness? You'll see this before the stream is over. Full-time worker here. What Bob texted me. Thank you for joining. Bob's on the live stream. So look at that. Good morning, PMG. All right. Hey, Balaji. So, belittle weakness. Full-time workers minus 433. Part-time. So, full-time ticking down pretty substantially. Part-time ticking up. That is a sign of weakness from the little more in-depth view. All right, you guys are everyone's so funny in here. Balaji, can you check mRNA real quick? Remember, stocks are better unless it's something key. You had the reversal off the earnings. You had reversal off the earnings. We are open mRNA, just a little gap fill. But overall, unless you really start trading above 156.50 again, then that would get it above this breakdown zone. I flip these around first off. And target 166.68. Other than that, this came up to the reversal zone back below the 200. I am not super bullish on this. 142.19 is key support. You start breaking below there, it is not bullish for mRNA. Let's check the open. And then I gotta jump. So we got the pause there still at the technical, not double target, but utilizing target, and then 376.96. If you want your shorter term level to key off of, now would be with this open. You're looking at about 337.80. Let me check in at the tick, though. So pretty bullish tick. Pretty bullish tick so far. Lots of buying going into the open. NASDAQ, little spike up. So again, we're above this 10,914.75. You break below that. Off the open, 10,875 now is your second level. I'm wondering if we're not going to get the ripper today, though. If we're going to go into more of a choppy-ish bullish mode. Going to see how well this tick holds up in the first 15 minutes. Again, this will be where I'm watching 400s, then zeros. VIX still pushing down based off the open. Notes. Doesn't look like the notes are going to trigger the double possibly. They've confirmed it, but no trigger. Lauren's waiting for minus 1,000. You know, we could go into choppy. If we start getting some negative tick readings, it's not overly bearish yet. It would be more choppy. And then we'd be leaning either towards choppy bullish or choppy bearish. And with squaring positions. Looks like the double targets. Oh, there they off slightly. Thanks. Again, this a double, not a double. This one was off slightly. Thank you. 37.85, 37.99. I'm just using those as a guide for areas to watch. Again, technically not a double because this rapid spike down with non-farm payrolls. If that spike wasn't down, you would have had the double. It's going to be interesting, though, to watch this key pullback level, 37.58, on any pullback here. All right. Tick's still holding up. Very strong on this pullback. So going to be watching really to see how this 400 area reacts. With that, you are welcome, Balaji. You're welcome, everybody. Thanks again. A shout out to Jake. If you see something that I did wrong or I didn't anchor something or you have a question, I make mistakes. It's part when you're going through stuff at a rapid pace. Put it in here like Jake did. That's fair. If you have questions or you think I'm doing something wrong from my technical analysis standpoint, put it in. Ask the question. You're welcome, Legion. Everyone have a wonderful trading day. I'm going to jump for now. Tick is such a great tool. Tick is a fantastic tool, especially for confirmation of moves. So we're getting the pullback. We're breaking below the short-term area. I'm going to be watching for the next bounce in the tick to see how strong the tick comes in on this next little rally up. Remember, the secondary reaction is key. Thanks for, again, pointing that out to people. That tick is such a great tool. All right. I appreciate everyone being here. I appreciate everyone tuning in, especially all the newer people. Got to adjust this just a bit. Got to adjust. Oops. Gonna use this quick little, there we, picky. Good. I'm dealing with multiple cameras. What about your tick? Let me check the tick queue real quick. It's Friday. Tick queue, pretty big rejection. Wow. Wow. We could go into choppy mode easily today with that. Yeah. I'm watching to see if this next key stuff holds, but if we start breaking below this early morning support, I will be in choppy mode the rest of today. With that, I shall chat with everyone after the close. Have a wonderful day. Bye for now.